So Brian Cornell, congratulations. You have won Yahoo Finance's 7th Annual Company of the Year Award. How did you make it happen in 2019?
Well, I think, Brian, it all comes down to the work our team did. And while I'm here accepting it on behalf of our team, it's really that target team across the country, our merchants, our marketers, our supply chain experts, the teams in our stores, all of our support groups that really deserve the recognition. So for them, this is a very special moment.
How do you explain a year like this? Retail is very challenging. Your stock price is up, I believe, over 85%. Same-store sales hot, online sales hot. How does it all come together like this?
I think we've stayed really focused on executing the key tenets of our strategy, investing in our brand, our stores, investing in our team. And I think we stayed very focused on our guests. And every decision we make is on behalf of the guests we serve. So I think that guest focus, that external focus, that very, very specific focus on our strategy each and every day, it's delivering great results, and that's all about what our team has done.
What has it been like for you on a personal level?
Well, it's been very gratifying. Obviously, there were some doubters out there a few years back, but to see people put Target back in the winner's circle, this iconic American retail brand, I take a lot of pride in the work the team's done, and it's certainly gratifying to see the progress that we've made.
How do you keep the team focused? They had a lot of big wins this year. How do you avoid, I guess, complacency from seeping in?
I think part of our culture is being very humble and making sure that we stay hungry, that we know each and every day we have a guest to serve and a business plan that we have to execute. So, we stay very grounded. We know that in retail, we get a scorecard every day, and we want to make sure it's a winning scorecard each and every day of the week.
So Brian, I think to understand the target of 2019, the higher same-store sales, the higher earnings, the guidance lifts, you almost have to go back to one date in particular, February 28th, 2017. That was your analyst day.
I remember that day.
I'm sure you do. Take us through that in the weeks up to that event. That is when you dropped the hammer, $7 billion investment over 3 years. What was that planning like?
Yeah, Brian, you actually have to go back even further, really back to work we did in 2014, 2015, 2016, leading up to that moment. Because we spent a lot of time talking to the consumer, understanding the guest, understanding what they expected from Target going forward. And we really thought about, all right, how do we win in this new era of retail? And when we talked to the consumer at a time when most people were talking about everything moving to digital, the world was going to go online, physical stores were going to go away. But when we talked to the consumer, they told us they still wanted a great physical environment, but they wanted it to be inspiring, they wanted it to be easy, they wanted to make sure it included great value. So we spent a lot of time for several years testing and learning, remodeling a handful of stores in Los Angeles, starting to build smaller formats, thinking about reinventing our own brands, thinking about how we used our stores as fulfillment hubs. So it was that day that we made the big announcement, but we had been working on it for years. And we also heard that the consumer still valued that human touch. So that was the day we unveiled the strategy. And as you know, on that very day, it wasn't well received, but we knew it was what the consumer was looking for from our brand. It's what our guests expected from Target. And we knew over time it was going to lead to a day like today, where we're being recognized as a company that is innovative and is driving growth again and is building market share, and most importantly, satisfying the needs of our guests.
Do you think that was one of the biggest presentations you ever had to give as an executive? You had to have known that was going to probably be a tough event.
Brian, it will go on the top of the list. And it's one of those moments you always remember, because when we first pushed the button, the reaction wasn't great. And we knew people were going to question investing in stores, $7 billion of capital to remodel stores, to build new stores as others were closing, to invest in our team. But, I stood up on stage representing over 300,000 team members and shareholders, knowing that this was not just the right thing for the next year or 2 years or 5 years, it was the right thing for the next 30 years to make sure this iconic brand has a place in the retail landscape for years to come.
Did you get a lot of pushback from Wall Street? I was in the room, and I remember when you announced that investment, I saw a couple analysts look at each other, and they seemed surprised.
Well, obviously the stock reaction was not positive, and many people just questioned, why would we invest when others are closing stores, are cutting costs and are trying to save their way to the next quarter. But one of the things that I'll remember about that day is there were certain people who pulled me aside after I walked off stage and said, Brian, if I was in your seat, I would do the same thing. And they knew that there was a path forward, but it was going to require capital and an investment in our team, in wages, and making Target a preferred place to work. But I knew it was going to take some time, and we had to put proof points on the board. And we've now had 10 great quarters where we're driving traffic into our stores and visits to our site. We're gaining market share, and we're starting to see those proof points lead up to a point where Target's back in the winner's circle.
What is your vision for Target? Look, we're at a Minneapolis store, sitting in a Disney shop. These things didn't exist, let's say, 1, 2, 5 years ago.
Well, we want to continue to make sure we're listening to the consumer, we understand our guests, we're thinking about what's next. So we're sitting here in front of Disney, and Disney's been a great partner for years and years for Target. But as we sat with them, we said, all right, what else can we be doing? And we started with 25 of these unique Disney stores inside of a Target. So bring that magic of Disney to the joy of shopping in one of our Target stores. The reaction we're seeing from the guest, I'd love you to be here on a Saturday morning when there's moms and kids in this department, where kids are sitting on a bench with Bullseye next to them, looking at the Disney screen, where you just see that magic and joy come together. And it's the unique part of, I think, our brand and the partnerships we have with people like Disney, and partnerships with great brands like Apple, and traditional partners like Procter & Gamble. Our relationships with vendors are really important. And now we've got some new partners like Levi's that are coming to us saying, you know what, because of the investments you're making, the inspiration we see in your stores, the capabilities you have from a digital standpoint, we want to be part of that ecosystem as well. And you'll see more of that in years to come.
It sounds as if you're gaining market share.
We are.
Yeah.
Virtually across every one of our major categories. So every time we have an earnings call, I always talk about things that I think are so important to the health of the brand. One, growing traffic. So when I think about our most recent quarter, our comps were really strong, over 4%, but it was driven by traffic growth and more footsteps in our stores, more visits to our site. It's driving market share across all of our major categories. So to be able to sit here and say, market share in apparel and in home, in toys, in food and beverage, in household essentials, big market share gains in categories like beauty. It just shows the health of our model and the uniqueness of our multi-category portfolio, which I do think is distinct in the retail business today, where 20% of our business is apparel, 20% is home. We're a 25% player in toys alone. We've got a big mix of our business in household essentials and about 20% in food and beverage. So we've got the diversity of our portfolio that really gives you a reason to shop Target each and every week.
Where are the market share gains coming from? Is it malls? Is it traditional grocery stores?
It's a combination of both. So we don't get all that granular data to say, all right, where are we winning and pulling? But obviously, we're picking up market share from all of our competitors, both big and small. And again, when we get that combination of great inspiration, make it really easy to shop Target, either in-store or online, deliver great value. When we do that across the box, we're picking up market share from all of our competitors. Maybe
you can explain. I think I've gotten a couple questions recently from investors. How could Target do so well when you have Amazon out there? You have Walmart out there. Target is not operating in some sort of silo. These are formidable retail competitors.
Yeah, I think the big difference, and I've talked a lot about the investments we made, and you brought us back to February of 2017. The single most important investment we made was in our team. And I think what brings our brand to life are those team members who each and every day are out there interfacing with our guests. And it's the magic in our business model where we've invested in our team. We took a very bold stance with our starting minimum wage. And back on that day of February of 2017, I said, we're going to move to a starting minimum wage of $15 by 2020. It's allowed us to attract and retain great talent. We make a major investment in training and development, and we're attracting the best team in retail. So what's different about our model is it's all about our stores and our team. So you think about the growth we've seen in digital. Well, most of that digital fulfillment happens in a physical store like this one. Whether it's order online and picking up and there's a Target member waiting for you, or driving into one of our 1,700 parking lots and within 2 minutes, one of our team members walks out to your car and says, thank you for shopping. And the kids are still in their car seats, getting ready to drive home. Most of our fulfillment takes place in that back room where we pick, prep, and pack and ship from that local store to your home. And we're in everybody's neighborhood, so it's quick and easy. So the investment we've made in our team and the belief that today's consumer still values that human touch, I think that's what sets us apart from many of our competitors.
I think there's still too much focus on what Amazon is doing. Most recently with the same-day delivery, they still have no stores.
Yeah. Well, and same-day delivery is the fastest growing part of our digital business.
With Shipt, right?
With Shipt, with over 100,000 personal shoppers that, within a couple of hours will bring it right to your kitchen table, or ordering online and a couple hours later you can pick it up in our store, or pull the car into the parking lot and one of our team members walks out and puts it in your trunk and says, have a great day and happy holidays. So we have all those same day fulfillment options. And in our case, it's usually within a couple of hours.
So you're nearing, I believe, the end of this $7 billion investment cycle. What does the next cycle look like?
Well, it's going to look a lot like it did the last couple of years. We'll continue to invest in remodeling stores, in building new small formats. We'll invest in our brands. We'll continue to build out our fulfillment capabilities, and we'll invest in our team. So our strategy isn't going to change. We're going to continue to work with great vendor partners and bring some new partners into the mix. We'll bring great innovation and excitement into our stores, into our digital channels. But the strategy we have in place right now, it's still in the early stages. We've got a lot more work to do. And we'll continue to invest in remodeling stores and building new stores in urban centers and on college campuses, introducing some great new own brands and national brands, continue to strengthen our ability to fulfill any way you want, and we'll continue to invest in our team.
Is it another $7 billion investment?
Well, you'll continue to see us spend, probably in the neighborhood of $3 billion of capital a year. So we said, that's what it's going to take to remodel stores and continue to invest in our business. Over time, we'll probably go from remodeling, 200 or 300 stores to, 150 to 200. But we're always going to invest in our stores and make sure we bring this inspiration, the newness, the excitement to our guests across the country.
You mentioned national brands,
yes.
And there has been some speculation in the athletic wear department. Where are you at with that?
Well, it's an important category for us. Mm-hmm. Come see me in January, and I think we'll have an exciting new own brand announcement in that space that we think are going to delight our guests.
Well, hopefully you can come back on Yahoo Finance and talk about that.
I'd be happy to.
Before we let you go, what does the next decade look like for Target?
I think it's a decade where we're going to continue to see this bifurcation of retail, where there are winners and losers, where companies like Target will continue to build market share because we're making the investments in our stores, in our brands, in our digital capabilities, in our team. And we'll just continue to delight millions of guests every week who shop our stores or visit us online.
Brian Cornell, thank you.
Thank you so much. Thanks for joining us.
Thank you.